Welcome back to the channel, and thank you for joining me. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're studying a strategy called Velocity Thrust Runner. It is a pure price action momentum system that uses no indicators whatsoever. No moving averages, no RSI, no ATR. Just the raw open, high, low, and close of each candle. By the end of this video, you'll understand how it detects a genuine momentum run, how it measures velocity and acceleration, and how it places its stop and its target. So let's dive in. So what exactly is Velocity Thrust Runner, and what problem is it trying to solve? At its heart, this expert advisor is built around a single idea, that real momentum is not one dramatic candle, but velocity. Sustained, directional travel across several bars in a row that is also speeding up. Many traders chase a single large candle and get caught buying the very top. Velocity Thrust Runner takes a more disciplined view. It reads 3 simple facts straight from the raw candles, with absolutely no indicators involved. The first fact is the run, a sequence of consecutive bars all closing in the same direction, which tells the strategy that price is persisting rather than chopping back and forth. The second is velocity, the net distance price has traveled across that run, measured against the quiet average bar range that came before it. The third is acceleration, whether the most recent candle is still expanding, proving the thrust is alive rather than exhausting. Because every input comes from candle geometry, this expert advisor can be applied to almost any market and any time frame. Major forex pairs, indices, metals, or crypto, and it behaves the same way on each. There is nothing to repaint and no indicator buffer to lag behind price. Who is it suited for? Educationally speaking, this is a momentum or breakout style approach. It tends to appeal to traders who like trend continuation and clean, rule-based entries rather than counter-trend scalping. It only ever holds one position at a time, and it defines its risk by market structure rather than by a fixed pip distance. Remember, everything we cover here is for educational purposes only and is not financial advice. We are studying how the logic works, not promising any outcome. Let's walk through the exact logic, step by step. The expert advisor only acts once per newly closed bar, so it isn't reacting to every tick. When a fresh bar opens, it evaluates the bar that just completed. And before anything else, it checks that it has no open position for its magic number. If a trade is already live, it simply waits for that trade stop or target to resolve the risk first. Now to the signal. The first gate is the run. The strategy detects whether the last several bars, by default 3, all close in the same direction. If even one of them disagrees, there is no run and nothing happens. But here is the clever part. The expert advisor fires only on the bar where the run first reaches its required length. It checks the bar immediately before the run, and that bar must be the opposite direction or neutral. If that earlier bar shared the run's direction, then the run was already longer. The entry would have happened earlier, and the strategy skips it. This is how each run is traded exactly once, at the moment momentum is confirmed and never chased late. The second gate is velocity. The strategy measures the net displacement of the run from the open of the first bar to the close of the last bar. It then compares that travel to the average bar range of the quiet bars before the run. The displacement must exceed that average range multiplied by the velocity setting, by default 2 times. This filters out slow grinds and demands genuinely fast directional travel. The third gate is acceleration. The most recent bar's range must still exceed the average range times the acceleration setting. If the latest candle is shrinking, the thrust is fading, and the signal detects no entry. When all 3 gates pass, the expert advisor enters at market in the run's direction. The stop loss is placed structurally, just beyond the run's origin extreme. The lowest low of the run for a buy, or the highest high for a sell, plus a small buffer taken from the average range. Finally, the take profit is set at a fixed reward-to-risk multiple of that stop distance, by default 2 to 1. Structure defines the risk, and the reward is measured from it. Let's read the code on screen, just as you would inside MetaTrader. At the top we have the input parameters, the dials you can tune. Lots is the trade size. Run length is how many consecutive same direction bars are required to confirm a momentum run, 3 by default. Raise it and you demand a longer, more persistent move. Lower it, and signals come more often. Average range period is the look-back used to measure the quiet baseline range before the run. Velocity multiple is how many times that average range the run must travel to qualify, and Excel multiple is how much the latest bar must expand. Push these higher, and you accept only the most explosive thrusts. Stop buffer PCT is the cushion added beyond the structural stop, and RewardRisk sets the take profit as a multiple of the risk. Now the signal logic. The function DR reads each bar's body direction, returning +1 for bullish, -1 for bearish. First, the code reads the direction of the last closed bar, shift 1. The loop then checks that every bar in the run shares that same direction. If one disagrees, it returns and does nothing. The next line is the no-chasing rule. The bar just before the run must be opposite. Otherwise, the run started earlier and the trade is skipped. Then velocity. It computes displacement, the travel from the run's first open to its last close, and requires that to exceed velocity multiple times the average range. Acceleration checks that the latest bar's range beats Excel multiple times that same average. Finally, for a long, the stop is set just below the run's lowest low minus the buffer. The take profit is the entry plus reward risk times the risk, and trade.by sends the order. Let's bring the logic to life on this chart. Notice there is no oscillator and no moving average here, because this strategy reads price itself. On the left, you can see 3 small, quiet candles drifting lower. These set the average bar range, the calm baseline the thrust must beat. Then momentum arrives. Watch as 3 green candles print in a row, each one a little taller than the last. That is the run forming, with velocity and acceleration both building. On the 3rd green candle, the run first reaches its required length, and because the bar before it was red, the expert advisor confirms momentum and fires the buy entry. The stop is placed just below the lowest low of the run, the structural origin of the move, and the target sits 2 times that risk above the entry. Price keeps thrusting upward, and a couple of bars later it reaches take profit. The long trade is complete. Now the market rolls over. After a small upward bar, 3 red candles print in sequence, each expanding, traveling fast away from the quiet range that preceded them. As the 3rd red bar completes the run, the strategy detects a fresh bearish thrust and triggers the sell entry. This time the stop sits just above the highest high of the run, and the target is again 2 times the risk, but below the entry. Price accelerates lower into that target, and the short trade reaches take profit. So in one picture you've seen both directions. A buy when a bullish run confirms with enough velocity, and a sell when a bearish run does the same. In every case, the stop comes from structure and the target is measured from it. This is an illustration for educational purposes only. And that brings us to the end of our breakdown of velocity thrust runner. Today we saw how this pure price action expert advisor reads 3 raw facts from the candles: the run of consecutive bars, the velocity of the move against a quiet baseline, and the acceleration of the latest bar. We walked through the entry rules, the structure-based stop beyond the run's origin, and the reward to risk target. And we read the meta-editor code together, line by line. Remember, this video is educational content only, and it is not financial advice. Always test any strategy thoroughly on your own before risking real capital. If you found this useful, please hit that like button, subscribe for more MT5 strategy analyses, and drop a comment telling me which expert advisor you'd like me to cover next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.